Hey, good morning, everybody. Going to go over our Forex trades for today, Wednesday, December 17th. We're doing the video early today, or I should say this morning, just mainly because of the Fed meeting, the FOMC meeting, started yesterday, but the announcement this afternoon. We don't trade on those days just to avoid anything leaking out of their meeting or something happening that adversely affects a position. And then we like the announcement to come out, let the market do whatever it's got to do because it can be extremely volatile, too volatile for us. We're not going to participate in that type of action. We never do. Let the market digest the information for a few hours and then look to trade later this evening. So that's always our course of action. That's our MO, and we will continue to do that. We did have one trade last evening, which was what you see here on the Australian dollar, Japanese yen. This trade, the signal at least, was announced several hours prior to actually being triggered. So everyone had ample opportunity to get into this trade. It was a really solid trade. Excuse me. We were short this Australian dollar, Japanese yen, 95.848. We took about a 40% of our normal size position because we were risking, more than 20 to 30 pips. But on a whole, we want to risk 20, 30 pips, maybe as much as 40 pips. So if you're going to risk, say, 100 pips, you'll take 40% of your position. You're going to, risk 80 pips, you'll take 40 or 50% of your position, something like that. So we took a 40% of our normal size. We covered half at 95.418. We picked up 43 pips on that. Picked up 17. That's equivalent to 17.2 pips on a full scale position. We held the other half. We were hoping it would approach the figure. It was taking a little bit longer than not than I expected, but we were getting ready to shut down for the evening. We didn't want to be stuck in a position heading into the Fed meeting. So it dipped into, once it broke 30, we looked to get out. We covered the other half at 95.266, picked up 58.2 pips on that half. Size adjusted is 23.2 pips. It did trade all the way down to 95.20. Maybe it broke 95.20 just a little bit. So the second part was a really good place to get out. And you can see what it did. It came back on after we got out of our first half, and we had announced all this as well. Once we got out of our first half, our second half, we had put the stop at break even, which was 95.848. And then it was taking a while to break down. So then we adjusted it down to 95.75, or maybe it was 95.70, that area. Just figuring pick up 10 to 15 pips at worst on that second half, which would be, again, equivalent to probably about 2 pips, because 40% of, let's say you picked up 10, 40% of 10 is 4.5, because it's only a half, right? So it would be about 2 pips. But that's better than breaking even. It's better than losing, right? Money's money. So we had adjusted it to there. And then once it broke 30 and it traded down, we figured it was getting late in the evening again, like I said earlier. So we just got out of it and picked up the 58.2 or 23.2, which is much better than breaking even and much better than picking up 2 pips, and wrapped it up. That way we're not holding anything heading into this Fed meeting. We're in cash, and we can settle in and wait to let the market digest any news from the Fed, and then we can look to trade later this evening from about 7 p.m. on the East Coast time and later. This was a really easy trade, just to go over it real quick. Whoops, sorry about that. You have, it's in a downtrend. You could look at 30-minute, hourly, 4-hour time frame. You could look at daily time frame. It's in a downtrend. It had a move up. Let's see if I can bring it up real quick. Let's see if we have. Let's check it 1 month. Nah, it's not going to be long enough. Not going to do that. But it would be difficult to see. But we basically had these downtrends, and which gave us all the opportunity to look to go short this. We had a retracement, and then once it took out some key levels, we were looking to go short. And it did take it out earlier in the day, but the rebound, and then when we saw the rebound and we saw it starting to get weak again, it's sort of like your key, like, all right, well, it broke down, it broke support areas. The support was right around this 96 figure. See how it broke it early in the morning. We did not participate in that. But when you saw the rebound really just stalled out and couldn't get going again. It tried to break down through the figure and then bounced again, but this top is lower than here, and this top here is lower than these. Really good sign to take this baby short, and it worked out beautifully. Anyway, so that's it. Like I said, this trade was announced several hours before we took the position or had the position get triggered, have the trade get triggered. So hopefully you took advantage of it and you made some good coin for yourself. So that's it. We're going to wrap it up. There won't be any signals prior to the Fed meeting. After the Fed meeting, we could get some signals. If you're trading now, good luck. If be on your toes at Fed meeting. If you're going to hold a position going into it, then I wouldn't do it. But that's totally your call. Could be part of your strategy. To us, it's sort of like totally gambling. We're not going to go down that road. So like I said, if you're trading now, good luck, and we'll be back tomorrow, assuming we get some action later today and or tomorrow morning.